Well, hello everyone, and a very warm welcome to this webinar hosted by Star and Innovate Finance, where we're going to talk about what's driving growth in Buy Now, Pay Later. My name is Rolf Merchant. I'm Head of Public Affairs at Innovate Finance. And for those of you who don't know too much about Innovate Finance, we are the industry body representing and advancing the fintech sector here in the UK. And for this webinar today, I'm delighted to say I am joined by three subject matter experts to discuss this topic with us, and I'll let them introduce themselves in just a moment. But before I do, I want to just take a moment to set the scene and explain why we're talking about this subject today. So anyone, I think it's fair to say, who's at least faintly acquainted with what's happening in fintech will know what a big story Buy Now, Pay Later has become in the last year to 18 months. Not just in the UK, of course, but globally. And the companies offering this product, Klarna, ClearPay, Lay-by, Zip, OpenPay, Zilch, to name just a few, are close to becoming household names. And I think it's fair to say in some cases they probably are already. To give some stats then on the growth of Buy Now, Pay Later, and these are taken from a report from the consultancy Bain, which came out last year. Buy Now, Pay Later transaction value in the UK reached £6.4 billion in 2021, representing about 5% of the e-commerce market. 49% of 25 to 34-year-olds have used Buy Now, Pay Later products. And there are now thought to be around 10 million users of Buy Now, Pay Later in the UK. And that's obviously from zero about a decade ago. So there most definitely has been growth in Buy Now, Pay Later, and we want to find out what's behind that today. So I've got some questions to ask of our panel, and we'll have a bit of a discussion. And audience, we're going to have some time at the end to take questions from you. So please do submit questions you've got using the Bright Talk Q&A box on your screens. So without more ado, I'll hand over to our panelists to introduce themselves. Let's start with Anastasia from Visa.
Sorry, I was temporarily muted. After 2 years, you'd expect I know how to manage that situation. So Anastasia Duva here. I'm part of Visa Europe, and I look after our core solutions, which in normal terms means I'm responsible for our debit, prepaid, and credit portfolios with a particular focus on installment payments. Good to be here.
Thank you, Anastasia. Olivier, we'll go to you next.
Hello, everybody. So I'm Olivier Bessy, product director for FinTech at Star. So essentially, I'm looking after overall projects and strategy when it comes to the FinTech space at Star. And in particular, the BNPL has been obviously a tremendous area of growth and a particular focus for us in the last year or so. With a couple of projects in that space, and it's really something that we've decided to focus on, if you like, as an industry, and it's obviously of great intellectual interest as well. In particular, we'll be issuing a report with some interesting stats and graphics very, very soon. So it's looking forward to our discussion today.
Excellent, thank you. And last but by no means least, Sylvia.
Hi everyone, my name is Silvia Kulvari-Krečmari. I'm the Chief Marketing Officer of Paidy in Tokyo. Paidy is the leading BNPL provider in Japan, and it has been in the news quite recently for various reasons, but one of the reasons is that we were acquired by PayPal, which I think it also shows the tremendous interest of different players within the market about BNPL in general. So I'm very much looking forward to this discussion today, and great questions from the audience too.
Well, thanks very much. It's great to have panelists from different parts of the market offering different perspectives and different parts of the world as well, because obviously this is not just a UK story, it's not just a European story, it's very much a global one. So lots to talk about. And I want to open up our discussion with a focus on the end user, the consumer. The first question being, what is behind the increase in consumer use of Buy Now, Pay Later over the last couple of years or so? I guess the question is, why is BNPL, Buy Now, Pay Later, so attractive to consumers? Anastasia, perhaps we can turn to you to start that one off.
Sure. So look, I think installment payments in general is nothing new, Rolf, right? So they've been around for decades, especially if we look at Southeastern Europe or Latin America. People have used their cards to pay in installments for many, many years. I think what has happened in Europe and in the UK in particular is that with a radical shift to e-commerce over the last couple of years, and the sort of initial buy now, pay later presence at point of sale, there has been exponential growth because I believe buy now, pay later have been at the right point at the right time, right? I think more broadly from the consumer, it solves a couple of challenges, or answers to a couple of needs. It's a question of timing. So the offer is presented to the consumer while they're browsing to buy something. So while they're thinking, do I select A or B product? Can I afford it? How am I going to pay for this? You have this offer to defer that payment and to split it into an installment plan, which is very practical and wasn't available before. And that is especially important for sort of, I would say, mid-sized purchases, right? Because any larger purchases you'll plan in advance, you'll think about it, but those mid-sized purchases, it's the timing is absolutely perfect. I think the second piece, why it's appealing to consumers, is the clarity of the offer, I would say. So especially in the 0% plans that are prevalent at this point in time, consumers understand that they will, split into 3 installments. There's a beginning and an end to that plan. And if you compare that to, for example, your credit card, where you may need to think, oh, will I revolve at the end of the month or not? And how much will my banks charge me? That offers a bit more clarity. And it's also, we forget it's transaction-based lending. So you're borrowing for that specific transaction. So it doesn't fall into that overall bucket of lending. Those are the 3 points, I think. On the flip side also, as has been quite common in the news, there's a question mark. Do consumers actually understand this is a lending product, or do they see more as a convenience, a cash flow mechanism? But that is something that is being tackled, I think, over the last year or so.
Yeah, thank you, Anastasia. I think that's a very clear setup, actually. I wonder, Sylvia, from your perspective as a provider, what do you see as the main drivers? What do your customers tell you that attracts them to using a buy now, pay later product?
So actually, the Japanese landscape is a little bit different from other big providers in Europe or in Australia and or the US. And the reason being is like how Paidy, for example, started. We try to address a very different type of a problem. So it's not that. So the original interest in our product was not because people cannot create a credit card. It's because they do not want to use their credit card. So it's a very different setup, actually. And so the original value proposition of Paidy has been that how we are a superior way of paying in e-commerce in a country where actually 51% of e-commerce payment is coming from cash on delivery.
Yeah, right.
And the reason why Japanese customers love cash on delivery is because of security, privacy, and as well as they are afraid of credit cards because they overspend. So actually the penetration of credit cards is extremely high in this country, like 98, 99%. So pretty much everyone has a credit card, at least one. So it is a very, very specific consumer problem. And actually, unlike other BNPL providers, we have a basic product, which is literally a pay later product. So it's not installment.
Yeah.
Which has been really the growth driver of our business, and we started to provide installments only last year. And for the installment as well, I think, as Anastasia mentioned as well, it's quite incredible, I think, that in many developed countries where you buy something as a big ticket items, for example, a house or a car, actually the mortgages or the loans or the car loans are like extremely low interest free, right? But when you try to purchase something which is sort of like mid-price, like a laptop or a phone or something, it's almost impossible. So us, providing these installment products here in Japan, actually, it helped people to make some of these mid-ticket items be more affordable as well.
That's a really interesting perspective, and I think understanding the sort of mind of the consumer and how they want to engage with these products and what they use them for, what sort of ticket size is a really interesting discussion point. Olivier, I wondered if you had anything to add to what's been covered so far on sort of consumer mindset, if you like, or anything else.
No, so I think Anastasia and Sylvia have made the great points. I think obviously you agree with all of that, and it's always fascinating to see the cultural differences from countries to country as well, and the kind of the role of cash still in Japan, for example. I think the few points I would add would be, of course, I mean, I think the cost aspect is important. I think who doesn't like free credit? Then I think one interesting aspect as well, which is put forward by a number of BNPL firms in the UK and the US, is the fact that there's no credit check, or kind of a light touch credit check, which means, you know, even if the credit isn't granted, you're not impacting your credit score negatively, for example. I think that's an important point as well. I think generally speaking, it might not be as prevalent as Sylvia mentioned in Japan, but even in, let's say, in Western countries, you also have, in particular amongst the kind of the younger demographics, maybe a certain reluctance to use credit cards, or simply not being eligible to have one. So I think that's obviously an important driver in that space.
Absolutely, and I think we'll be coming back to credit cards a little bit later. There's been plenty of questions about that as well in advance. There is, of course, another part of the buy now, pay later sort of usage or ecosystem, if you like, which is, of course, retailers, merchants. Sticking with you, Olivier, I mean, I wonder if you could just summarize what do you see as the advantages for, or why would a retailer want to be so keen to offer a buy now, pay later product? What's in it for them?
All right, so I think the prime kind of the traditional reason, I would say, which really fostered the birth of buy now, pay later, is you're going to improve your conversion rate, and you're going to improve your average order value. So essentially, people know they're going to be able to spend more because they don't have to pay straight away, and they might not, for example, stop the purchase process midway because, you know, they realize, well, they don't have enough money on their account. So I think that's really the traditional value add, which has enabled buy now, pay later firms to basically acquire a fairly big network of retailers that they work with. So I think this is the kind of the traditional benefits. I think it's also important to see that it's going to be more valuable to certain industries. So it's going to be in particular very useful to industries where you have a fairly high margin, a fairly high gross margin, and also a high cost of customer acquisition. So I think obviously fashion is going to be the prime, maybe some segments within maybe electronics, potentially travel, although maybe the margin isn't so high there. But essentially these are the prime, I would say, kind of a target for BNPL because of those two characteristics. Maybe it's less applicable, for example, you know, to let's say if you're going to the supermarket, you wouldn't be using buy now, pay later, because that would basically probably take the whole margin from the supermarket. So I think so that means that it's more important for some niche. That also means that if they want to continue growing further, and I'm sure we'll talk about that a bit later, BNPL firms need to also think about what advantages they're going to offer beyond average order value increase and increased conversion, and think about, for example, what they can do to drive the top of the funnel and other activities.
Yeah. And I think it's interesting that you mentioned fashion, because I think, like, you know, many leading buy now, pay later providers started there, right? Like, you know, Klarna is very strong in fashion, and actually, like, you know, we started in fashion too, but for a very different reason. And it goes back to these cultural differences in Japan, that because of the importance of cash. Essentially, our initial merchants, where they see the biggest value of our offering, is that we helped them create operational efficiencies. Like, you know, cash on delivery is a lot of waste, right? Like, it's redeliveries, it's trying to recoup the money from customers as well. So it's like, you know, whatever helped them to to shift customers from cash on delivery to something more efficient, like they were happy. So that's so these operational efficiencies is definitely one. It's much easier, return and as a refund the money. But but the next point is that we guarantee payment for them, right? Yeah. So they don't have to worry about that the customers do not pay. So again, it's a very it's quite specific to Japan, but I think it's an interesting aspect of what's happening with the retailers.
And just to add to that, I think another benefit to the merchant, apart from everything else that the team has articulated so well, is the fact that there is, at the moment, buy now, pay later are able to offer very high approval rates. So there's a minimum dropout. There's very low friction. Some would also argue maybe a little bit too little friction in terms of the consumer understanding what they're actually signing up for. And in that sense, it makes the process quite easier. And I would say that in some markets in Europe, it's also table stakes. So it's probably no longer a differentiation point. There are a number of options at checkout that you will see while you're browsing. And the merchant is expected, especially in some categories that we've just discussed, is expected to offer that kind of option as a repayment option for sure. So those are, I think, are the key factors of that sort of merchant benefit.
Yeah, I think that's a really important point, and probably explains a fair chunk of growth in the last certainly year. That if you've got to offer it now, if you're a merchant, so there's no escaping it. Fantastic. Okay, well let's move on. I'm quite interested to hear about some of the differences, or perhaps some of the approaches that buy now pay later providers are taking now to maintain and even increase their growth. Olivia, turning to you, I wonder if you could tell us a little bit about the growth strategies of the main buy now pay later providers now, what they look like, and I suppose how they're working to capture even greater market share and drive revenue growth. What's going on there?
Sure. No, so I think there's multiple avenues really which are being followed by the different firms, and I think it's interesting to also kind of compare the contrasts between those. I think, for example, if we're looking in particular in Europe, you have I would say more like a transition to issuing things which are close to credit cards, which they might not call credit cards, but basically you have like a Klarna card, and we see it's been kind of the zilch model for a little while. So essentially moving to close to being a credit card issuer, although by a different name, which means basically you can kind of capture additional share of wallet if you have a physical card. I mean, maybe that makes it a bit easier to pay on to basically pay in physical stores on point of sales. So I think that's one trend. I would say as part of that, you also have to broaden their appeal to customers, the use of one-time card for merchants which are not in their network, which is something that is becoming very popular as well. So I think here in that case, it's really about market growth and customer acquisition. You're not going to drive a lot of revenue. It's just a little bit of maybe interchange, but it's really about getting more customers on board. I guess another interesting trend is kind of combining buy now, pay later, almost merging with point of sale financing. So I think in particular, if we look at a firm, that's really what they're doing. So when you're going to pay with a firm at the merchants in the US, you will have essentially almost a drop down where you can say, well, you can pay in 4 installments and free of charge, or the other option is to pay over maybe 12 months, and then of course there will be an interest. So it's almost like you're offering BNPL, point of sale financing under the same roof, and you can switch seamlessly between one and the other. And then finally, a last trend, and probably more in Europe as well, is kind of the trend towards what might seem a bit antithetical, but basically buy now, pay now. So essentially, we're driven by Klarna, where you would work with merchants and you would basically process all their payments, whether it's buy buy now, pay later, or even like direct payments. And I think it's a way of growing their, I would say, their added value to the merchants, to basically increase their share of wallet, be able to drive, if you like, more customers to the merchant. So essentially taking care of that kind of the top of the funnel activity, and really, but basically making sure that the merchants are getting more value and are probably less likely to move to another providers.
Yeah, that's really interesting, and it sounds counterintuitive, doesn't it, as you say? But there's method clearly. Sylvia, turning to you, what's Paidy doing? How are you branching out and trying to capture more growth?
So a couple of areas actually to build on also what Olivier said, but there's another very fertile area I think, which is settlement innovations. So the big players in the US or in Europe as well, like you have to add another type of payment to your BNPL account, right? So like usually it's a bank account or something else. Paidy is not asking for that, and the reason is because we wanted to make sure that customers can settle with cash, and which is actually, it is an innovation, right? Because when you think about it, like, you know, that you don't have to provide anything upfront is quite, it's a convenience for the customers, and particularly for the Japanese customers. Like, you know, I keep repeating this point, but it is very important that we allow this. And we are actually further innovating in this area. So we recently launched another feature, which is the Pay Now, which customers can settle their bills whenever they want. So it's not the one that Olivier mentioned, where like basically, like, you know, it's not the bank pay, but it's when they want to settle their bills, it's up to them, as long as it's within the settlement cycle. And again, it's to provide peace of mind to customers, so that they don't feel like that they are in some sort of a debt, and also, like, you know, they can manage cash flow better. And overall, I think it helps responsible finance in a way.
Yeah, fantastic. I mean, yeah, a lot going on the product roadmap, obviously. Anastasia, do you have anything to add there?
Yes, absolutely. So just to offer a bit the network scheme point of view. So from our perspective, what we're looking to, also acknowledging that this is a solution that consumers need and value and really utilize. What we are making available to merchants as well as issuers is our APIs that enable them to connect to consumers, so that consumers can use existing cards in their wallets to pay an installment at point of purchase or checkout. I think the additional value to that, apart from the side that, you know, you don't need to go through a credit approval process at the point of sale, it's happened already, is the fact that you can also rely on very specific and well-embedded processes when it comes to chargebacks, returns, consumer protection, frauds, and so on. So it's utilizing that sort of stability of the network to allow for that installment payment.
Yeah.
But I would say also in the same vein, traditional issuers are also looking, you know, at ways in which they can also on their end communicate a bit better to consumers, you know, how they can manage their installment plans better and their overall debt and finances.
Yeah, that's a really important point. Yes. Interesting. Okay. I want to just ask a quick question on how sort of big retailers are responding to the emergence of buy now, pay later. And I'm thinking people like Amazon, IKEA as well, I think, are exploring these kinds of buy now, pay later products. Perhaps going to you, Olivier, on this one. I mean, how would you sort of characterize how some of these retailers are responding, and what's driving that response?
Yes, I think what's driving their response is, I think in part the kind of the cost of buy now, pay later to the retailers. I think obviously the buy now, pay later is fantastic for the consumer. or if we put aside the risk of getting into debt too easily, but basically that means the cost is essentially borne by the retailer. So I think in the case, for example, of let's say fashion brands, which probably have a high product profit margin, it's not an issue because it brings them more customers, higher AOV, etc. If you have retailers who work on tighter margins, that's obviously less of I guess an interesting option for them. So I think that's really what's driving the thought process. So I think you have one option, which is to say, well, to try and play, I guess, one BNPL provider against another to try and derive lower costs, to try and get more value from the BNPL providers. So that's why Klarna are doing lots of efforts in terms of, for example, their top of the funnel activities, so that in addition to the higher conversion rate, they can bring more consumers to the merchants, like referrals, basically. But I think a lot of providers are looking at different options in terms of either developing BNPL offering themselves, like Amazon, or essentially partnering with typically like a credit institution to provide that offering. So the idea is they don't necessarily want to become the bank, because in that case, I guess you're trying to improve your customer experience, but then if you have to I guess recover funds for late payments from them, it's not great from a brand perspective. So they try not to become the bank, but partner with credit institutions and basically offer almost the same sort of things that let's say a firm started with in the US, where you have those options to say, well, you pay now or you pay at a later stage, but then there's cost to the financing. It's not free credit.
Yes, of course. Yeah.
And if I can add to that, I think Oliver, you made excellent points. I think the point of sale financing space is ripe for disruption right at this stage. So, and I agree with you that large retailers will look to work with lenders for the lending part, to avoid all these components that you mentioned of being a lender. I would also argue that we may gradually see a shift away from 0% offers over time, especially as these margins compress and for larger ticket items. So it's quite likely that we see installment or pay later options that come with an interest charge or a fixed fee charge to compensate for that cost of funding, who somebody at the end of the day needs to cover, whether that's the merchant or the consumer.
Yeah. But I think from a provider perspective, if I may, point is that I think it really comes down to like how quickly we can innovate to solve retailers' problems, right? Like and big names problems. So for example, Paidy is natively integrated into Amazon checkout, and the reason why we were able to do that, because Amazon had a huge problem of cash on delivery. And then we had a solution. Or last year when we launched our installment plan with Apple up to 24-month installments. Again, like they were facing a quite unique challenge in Japan against mobile carriers. And we had a solution, and we quickly put together a new solution just for them, and we were able to do it. So I think it's also it's a very exciting territory in terms of that. Lots of opportunities of BNPL providers. It's all about quickly diagnosing what the potential challenge of a brand or a retailer is, and how we can then quickly put together a solution. That's I think that's the beauty of fintech at the end of the day.
Yeah, absolutely. Yes, that's a very good point to make. Thank you. Okay, let's move on. We've talked a little bit about credit cards. They've been mentioned a couple of times. I just want to sort of hone in on this. So, what do you think? What does the panel think that in the long term the impact of buy now, pay later will be on the consumer credit market? I mean, are we going to see the decline of credit card usage as some people are suggesting? And Sylvia, just from your point of view, I just wonder what you thought about that. I mean, is buy now, pay later going to severely disrupt the future of credit cards and consumer credit more generally?
I think we have disrupted the category, but whether we are going to see more rapid decline of credit cards, I don't think so. It's more of as a healthy coexistence and inspiring each other to at the end of it. And I think at the end of the day, the customer will be the winner of all this. Many legacy providers, they are trying to innovate in fintech spaces, whether this was revamping their digital experience or app experience, etc. And I do believe that so it's the share of BNPL could be rising because the benefits are so diverse, and for us, for many of the fintech companies, it's much easier to innovate. As I mentioned, whether it is the settlement or whether it is a new type of a product, etc. But I do believe that there is going to be a certain cohort of customers who do appreciate the more legacy offerings of credit cards, which are great benefits, right? Whether you think about, for example, the loyalty points, or once COVID is over, the loyalty miles, we all appreciated the miles, right? Or whether it is a very special customer services, all that, and it's and I think legacy credit card companies, they do have an edge there, although there are many different ways how I think we can innovate there, but I think in a healthy coexistence is what's going to happen. But another part of this is actually, which is an interesting element of BNPL versus credit card, is that impact on credit itself, credit score, right?
Yeah.
And impact on credit score, and it was reported just at the end of December, I think that Equifax, for example, in the US is adding BNPL payments to credit reports, and the firm is already reporting some elements of their loans. But I think many of those reports focus more on the negative aspect of that, but I think that definitely more as a positive aspect of it, which is if somehow it could be figured out that it's actually on-time payment will positively impact the credit score. Then actually it has a huge benefits of younger folks in certain countries who do not have easy access of legacy types of credit. But of course that how. Of course, there's still quite a lot to figure out in that space, because at the end of the day, the BNPL installments are still too short, and they don't fit into the legacy loan terms and reporting. But I think it will be a very interesting area, how it will be evolving moving forward.
Yeah, the scoring element, the credit scoring element, it's a big question going forward for sure. Probably do a whole webinar just on that, I'd have thought. Anastasia, Olivier, anything to add to that, future of credit cards versus buy now, pay later? Anastasia, please.
Yeah. So a couple of points. I agree with everything that Sylvia's just described. I see this disruption that buy now, pay later have brought as a good, I would say, even wake-up call for traditional banks to rethink their propositions, and everyone will probably meet in the middle somewhere, right? So buy now, pay later will need to start reporting to the bureau. Some have already voluntarily started doing so. There may be a regulatory framework that will determine the kind of agreements they need to set up on the back end, and equally, incumbents will need to rethink about how traditional credit products are set up, and are they meeting all of the customers' needs, or do they need to differentiate as well to offer an alternative offer? The key there will be speed of adaptation on both sides, right? And there might be some consolidation in the buy now, pay later space as well in that sense. But I would agree that in terms of credit cards, they're here to stay, and I think the onus is now on issuers to adapt the proposition rather than doing away with the whole system of credit cards and the good things that it brings with it as well. That is what I think more broadly on this.
Yeah. Olivier, anything to
Yeah,
add?
no, I think I very much agree with what Sylvia and Anastasia have mentioned. So I think they're very likely to coexist. I almost compare it to, let's say, the reports that, let's say, that 20 years ago the internet was going to replace television. Well, people use the internet, but they still watch television. So I think it's almost like a longer.
And they stream today, so there's a hybrid.
Exactly, and they use the internet on the television, right? Yeah.
Yes.
And I agree in particular with what Sylvia has mentioned. I think there's some very, very strong kind of incumbency advantages for credit cards. So I think obviously if you're kind of a bit reluctant to use them, then you might be tempted to use buy now, pay later. But if you don't have that reluctance, I think there's some strong incumbency advantages with things like cashbacks and loyalty points and insurances wrapped up with the credit. And I think it's here to stay.
Yeah, interesting. Yeah, the incumbency sort of value it's easy to see sort of in financial innovation land, isn't it? And actually, I do have one final question. That there are quite a few from the audience, which I do want to turn to. But we have talked a little bit about this, which is the future of payments and how buy now, pay later is shifting that. Again, we have sort of covered this a little bit, but Anastasia, I wonder if you could just sort of crystallize a little bit of what we've talked about in terms of how buy now, pay later might cause further disruption in the way that consumers make payments and what that looks like.
I think what buy now, pay later have started to do is shift the economic activity from sort of your mobile banking app to the retailer space. I think that's the interesting piece, right? So the retailer space becomes a marketplace for financial institutions now to show their offering. And that is buy now, pay later. That is, as I mentioned, so the banks that and issuers that Visa is enabling with the API. So there's that marketplace is established at a different point, which is the retailer premises. I think there's also an opportunity to start consolidating some other offerings. So to look at consumer value more broadly and to think about not just the repayment terms and the installments, but also loyalty offer to that consumer, sort of building a little bit more on that, on the customer profile as they shop at a specific retailer. So that I think is a dynamic that we're seeing more broadly. And who's to know what the next iteration of that will be?
Yeah, it's very hard to crystal ball gaze on this one. I do want to get to audience questions, but very briefly, Olivier, Sylvia, do you have anything to add to that one on the sort of the future of payments?
So I think maybe I think one thing I would add as well is from a technology perspective. Obviously, it's interesting to see that when you have, let's say, buy now, pay later players like Klarna and the likes, essentially it kind of creates an additional payment trail. And I think Sylvia kind of alluded to that. So when you're paying with Klarna, essentially you have a payment that goes from the, if you like, from Klarna, essentially issuing credit, and then to the paying the retailer, which is not going via the kind of the traditional card rails. So I think that gives opportunity in particular in the future to have maybe like a more data-rich, essentially information flow, where essentially currently if you're looking at the card rails, there's very little information that flows back to the issuer. You just have like the merchant essentially and the amount and the date, but essentially a bit more than that, but broadly. So I think basically that means you have as part of your if you like your transactional data, if you're using essentially new rails like the Klarna rails or the Afterpay rails, essentially you have in particular product level information, and potentially that opens a lot of opportunities to leverage that for things like credit scoring, promotional offers, that sort of thing. So could be interesting.
Yeah, interesting. Sylvia, anything else, or should we turn to some audience questions?
No, let's turn to the audience questions because there are quite a few lined up, I think, and also before the session started, we received quite a few. So please.
Yeah, absolutely. Okay. Let's start with this one. So the question is, an FD article said buy now, pay later was only viable if firms cross-sell other products. Do you agree? And are buy now, pay later firms entering other markets, or I suppose they mean already trying to cross-sell with other products? Who wants to take that one? Anyone want to dive on that one? Olivia, go on.
I can dive, yes. So I think so. Essentially, I think there's a point to it. I don't think it's strictly true right now, but I think naturally the tendency will be to grow naturally. So once you have been successful in the buy now pay later space, to provide either sort of traditional point of sale financing as well as BNPL, provide issuance of cards, provide buy now pay now, as we've called it. So essentially that there's kind of that natural tendency for that space to grow. I think the point here is about that the FT was making was probably around profitability, which I think is a valid question. If you just have a buy now pay later offering, can you really be profitable? So I think that's really where the key is. So that's where maybe if you had the expense of for example acquiring customers, then once you have those customers, you're going to be able to leverage that by selling them additional services, a bit like, let's say, for example, Revolut have done, where they've started with just like basically kind of prepaid cards, and now they're obviously a fully fledged bank. So I think it's likely to evolve in that case. It's likely that just BNPL as a silo by itself is not very profitable.
Yeah.
I think there's another aspect of this about lead generation. So we tend to think about okay, so this is one retailer and then these are the set of customers. But at the end of the day, we have an ecosystem of different merchants and as well as not just the merchants, but through open loop as well. Essentially, for example, our offering is available anywhere. So it's more about how we can tap into that user base, and as well as how merchants can tap into that user base, which goes to the points that Olivier made earlier about the top of the funnel as well. So it's all about lead generation, right? Lead generation, whether through more traditional methods of marketing automation, CRM, that kind of a thing, or what, for example, what we started to do last year as well, that we do offer in-app shopping. It's a shopping service basically within the app, which is all about top of the funnel. So I think there are quite a few opportunities there moving forward.
Very good. Okay, got another question here. How do you see incumbents responding to buy now, pay later growth? What sort of products could they offer to compete? Anastasia, I feel like that might be one for you.
Feels like one for me. We certainly have, right? We certainly have, and I think incumbents a few years back also tried to enter this space in the form of a post-purchase installment offering, which wasn't that successful, admittedly, for all the reasons we talked to earlier in this conversation. But we do see them adapting. We have quite a few examples. We have, Chase in the US launching installment products. Same here with Monzo, a number of other fintechs following suit. So. Most issuers today are looking into one way or another to offer that kind of proposition. The fact that I think there are some advantages to that. The fact that they already have a relationship with a consumer, there's no new registration required. There's a credit scoring that has already happened, so they know what that customer is eligible for in terms of credit lines. And I would also argue, Olivia, that there is also enough knowledge about the consumer and data to be able to pass on or to the merchant, or get on from the merchant to understand that consumer's behavior and preference as well. So I think the challenge for incumbent has more to do, I would say, with technology. How quickly can they adapt their systems or collaborate to bring these solutions to market? And also, I have to say, they're much more subject to reviews from the regulator as well. So until that point, until we have a level playing field for all players in the buy now, pay later and lending space, they will have a few more boxes to tick before they can launch installment propositions. Think about affordability and overall consumer exposure to lending.
Yeah,
and not just about. Yeah, definitely. I totally agree with you. But also, I think there's another aspect of incumbents, which is a better UX UI. for even just like the basics, even just like a basics of, for example, like the app or like, you know, the web account, like, you know, whatever that is. But I think it's pretty encouraging to see that. I don't want to take, of course, like, you know, a credit as a BNPL provider that you know, because of us, like, you know, some of the incumbents app experience is getting better, but it's actually, I think, just as a consumer myself, it's very encouraging to see. I think, like, and it's in terms of the usability, in terms of the transparency, which is very important, and as a BNPL provider, like, you know, we really focus on transparency of like, you know, when people spend, how much they spend, so that they can be more responsible with their finances as well. So I think it's something that for the incumbents as well, it's pretty important.
Yeah, absolutely. Okay. This next question, actually, Olivier, it's directed at you specifically. It reads, Olivier, you've mentioned top of funnel activities a couple of times. Can you give some examples in this space of what buy now, pay later firms are doing?
Sure, of course, and I think after that I'll also have to defer to Sylvia on that topic, because I think it's a definite area of expertise. But essentially, examples would be to essentially attract consumers to the merchants, essentially, and provide them with like traffic and interest. So that means it can be simply a way of saying within your buy now pay later app or website, you're going to be able to feature certain merchants and say, for example, hey, you know, these merchants are new to Klarna. This is a brief description of what they offer, and you know, essentially generate interest that way. It can be a way of kind of having more like seasonal, for example, selections of products and suggestions, and say, well, you know, here are kind of winter equipment, and basically provide links to either directly the kind of the merchant homepage or specific product pages within the merchant websites, and essentially feature those products. So it's almost like a kind of embedded, like an ad, or in a way, but embedded within like a thought piece. Or it can be, I mean, it can be as straightforward as an ad. So I think if you look at, for example, the Klarna application, you have adverts like you would have on like a magazine. So I think it's that's really the approach. Is almost making your buy now pay later app feel like a fashion magazine in a way. That's kind of the Klarna approach. But yeah, I think Sylvia will probably have a lot to add on that.
Yeah, so just like, you know, one point, and I certainly, like, you know, we cannot compete with the big malls, like, you know, the Amazons, and we don't want to compete with them, or we cannot and don't want to compete, for example, with the Instagrams of the world, like, you know, with all the curated, great, like, you know, inspiring content. But somewhere in between, like, I think, like, you know, it's a little bit of both. Like, when we dialed up, when we launched our open loop services, so that we were able to serve up contents to our customers, where Paidy is not natively retailers where Paidy is not natively accepted, with some as Olivier mentioned, with some either personalized or some seasonal contents as well. So it's all about like, you know, trying to inspire our customers, but also like it's lead generation for both for our native merchants, and as well as in a broader space. So again, like, you know, we try to create a win-win for retailers, and as well as, of course, the customers as well. So it's all about lead generation, and how we monetize that lead generation. Of course, there's, like, you know, many different ways to do that. So we are going to continue to innovate that space, but I think it's a fertile territory for BNPL providers.
Yeah, very good. Okay. Moving on, there have been a couple of questions about the growth of BNPL, buy now, pay later, to spell it out, in the B2B space, and how that compares with B2C growth. So views there on if you like, B2B, buy now, pay later growth. Olivier, perhaps, would you like to have a stab at that one?
Sure. So I mean, I think certainly you have. I wouldn't necessarily call that BNPL, but more like kind of point of sales financings for SMEs, for more like big ticket items. So essentially, let's say, you know, computer equipment and the likes. But I think you'd have to question whether that's truly BNPL. So things like let's say Dell Financial Services and others. So I think that's one example. I think what is interesting to see is the fact that you have, I think, in the B2B space, it's not necessarily that the credit is extended to, let's say, companies or SMEs, but I think it's more that a lot of new players. I think we were talking earlier about the response from retailers. So I think as a retailer, I may, in order to, retain more value, I may not want to necessarily be part of, let's say, Klarna or Afterpay's ecosystem, depending on my business model. So if I want to offer a buy now pay later services of my own, or POS financing of my own, obviously I'm not going to want to redevelop that from scratch, because that's not my core area of expertise. I think that's where I'm going to partner with, let's say, a partner credit institution, let's say FDIC, a bank in the US, for example. And I think in the B2B space, we're likely to see things of the kind of the partnership between retailers and kind of credit providers or technology provider in order to get those offering off the grounds. I think we're also seeing almost like a cottage industry, if you like, of B2B providers, not necessarily in the B2B space, but that would enable you to build, if you like, a BNPL solution by assembling components. So you have, let's say, one provider selling you the loan management piece. Another provider is going to handle, let's say, the credit decisioning and the KYC. And so basically you can take those different components and make a BNPL solution out of it.
Yeah, that's really interesting. Anastasia, sorry, did you want to come in there?
Yeah, just one minor point. I think it is an opportunity for sure. I would argue even for BNPL players or incumbents who want to offer installments on their cards to reach out to the professional one-man or one-woman bands and smaller SMEs where you don't have complex company structure, right? And it's those segments are, in inverted commas, quite consumery in that sense. So there's definitely a relevance of that value proposition to those segments. We may see that picking up more.
Yeah, and actually, like one of the legacy pay later providers here in Japan, so it's not a buy now pay later, but it's more like legacy pay later. They sort of started their business there, so it was more like B2B, and they're still going well for them, and good for them, and it's all about operational efficiencies. Less innovation there, I think. Like if you look around, but it's a viable business.
Yeah, interesting. Okay, all right. Moving on. There've been a couple of questions, basically relating to how consumers or users of buy now pay later can more kind of easily keep on top of their outstanding debts, and sort of how firms can sort of help make sure that users don't fall into default. I mean, it'd be interesting just to hear sort of a couple examples of sort of what that looks like, because obviously it's a sort of fair challenge to the industry, what that's sort of looking like, and what strategies buy now pay later providers are taking. Olivia, you might have a sort of good sort of industry-wide view of that. If I can point that in your direction.
Sure. So I think what they're aiming to do, I think, is they tried to do it from the perspective of, if you like, a UI UX perspective, by saying, well, we provide transparency about both how much you've spent, provide kind of a clear view of how much you're going to have to repay when. So I think a lot of their kind of that education process has been done through UX. I think they may need to do more of that, I would say, in the future, and probably maybe orientating part of their marketing, I I would say, the marketing push and kind of their outreach on focusing on that item. I think right now they've kind of, in a way, taken a kind of not a victory lap, but basically congratulated themselves by saying, "Oh, well, we're not like the evil credit card companies, but it's all nice and there's their interest." I think they may need to do a bit more than that. I think, but the idea is that really they do that for transparency, and fundamentally, I think one of the big benefits, I think Sylvia was mentioning that, is they are still fundamentally different from credit card companies in that you don't have that risk of having the credit that's revolving and then you start paying interest on it. So I think that's really the big difference, which we put them in a much better stead vis-a-vis kind of any kind of criticism from that perspective.
I think open banking also will offer that opportunity in the future to offer, first of all, a consolidated view of your overall exposure, whether you're using credit card or buy now, pay later companies, but also in terms of the affordability piece that we touched on earlier. So that sort of data flow and customer view in terms of how much how much outstanding debt do I have now? How much more can I borrow? Where do I stand? And where are all my installment plans? What are those payment dates coming up? I think open banking will shift that dramatically as well in terms of the customer awareness.
Yeah,
that's a really good point.
Yeah, absolutely. I mean, from a fintech point of view, sort of having a innovative solution to the problem seems sort of the most logical, doesn't it? We're almost out of time. Sylvia, I just wanted to turn to you if there was anything else you wanted to say on sort of helping customers manage their payments, basically from a Paidy point of view.
So it's really, as Olivier said. So for us, it's one of the fundamental pillars of basically responsible financing, right? So as I mentioned, our product is not all installment. So there's the basic offering, which is not installment, but still it's all about managing the cash flow. So a real clear and real transparent UX UI is definitely. We also use other touch points and how we. And it sounds so cliche, but we really do put a lot of effort into thinking through the entire customer journey. So what we communicate on retailers point of sales, basically, what emails we are sending them, at what point we are sending them these emails, how that is being reflected in the app, or if people don't want to use the app, then we have another solution, the web account. So also by diversifying these touch points based on customers' preferences. So then we really encourage them to to read everything rather than we are forcing them that, hey, this is the only solution app, and then you got to use it. I think that's also part of the solution, and keep optimizing it. So this is really one of the areas that is always a high priority for us. Whatever we can do to optimize that. So because at the end of the day, we want happy customers and happy merchants as well.
Yeah, absolutely. Well, we're almost at the hour. It's so much more we could talk on this subject. It really is a massive one, and I'm sure we as Innovate Finance will be covering this in some more detail before too long. Growth of BNPL is absolutely phenomenal. There's a lot going on in this sector, and a lot more, I think, innovative things to come, new products, buy now, pay later firms taking different tacks, trying different things to capture greater market share. So absolutely fascinating. Anastasia, Olivier, Sylvia, thank you so much for joining us and sharing your thoughts. Loads of really interesting insights. So absolutely brilliant. Can't thank you enough. And audience, thank you for listening and for your questions. Very incisive. One last thank you to the STAR team for co-hosting this webinar with us today. But that's it, I think. Thank you, everyone. Once again, take care and goodbye.
Thank you.
Thank you so much.
Thank you.
Thank you, everybody. Thank you.
Thank you. Bye-bye. Bye-bye.